Good morning. This is Larry McMillan with a market comment Monday, January 13th, 2020, before the market opens. So again, last week, the market moved higher. It's the rate of increase has slowed down quite a bit. And we sort of have a new thing where it's really not going up on Fridays anymore, but still, we're not getting any sell signals. The S&P chart is still strong. There's support at, well, depending how you want to look at it, but 3190 to 3210 is our first support level on that overnight probe that we had last week when the futures traded down. They traded down to 3180. So that might be, or technically, the correct support area. In any case, the moving averages still trending higher. The Bollinger Bands are trending higher. And so the chart is bullish for S&P. A few of the other indicators are showing some wear and tear because there's a lot of overbought conditions out there. One of them is the equity-only put-call ratio. It continues to drop to very low levels. The standard ratio is the lowest it's been in almost 6 years, and the weighted ratio is as low as it's been in 2 years. But as long as they're continuing to decline, that is not yet a sell signal. It's an overbought condition, but as we say, overbought does not mean sell. So we're waiting for those ratios to curl over and begin to rise and trend higher, and that would be the sell signal. Market breadth has been something of a problem, and the breadth oscillators are right on the brink of a sell signal. If we have negative breadth today, or say strongly negative breadth tomorrow, these will probably generate the sell signals. The problem is breadth hasn't really been that great, that expansive all throughout the Trump administration. So to say that breadth is the first thing turning negative, yeah, I'm not that excited about that. However, volatility is more in the bullish camp. VIX is still remaining low. It probed up above 16 briefly. In fact, in those overnight sessions last week when the market sold off and then bounced back, there was another probe above 16, but VIX has not been able to close above 16 really since last October. So in other words, as long as VIX stays at this fairly low levels, drifting sideways, the market can continue to rise. Now we are coming into a somewhat negative seasonal period briefly here for the next, say, week and a half. It typically shows up more as a negative area in NASDAQ rather than the S&P, but obviously both. And then at the end of the month, though, there's positive seasonality again. So at this point in time, the market continues to be overbought, but really not yet on a sell signal. So we're still riding our longs. We're raising trailing stops. We're rolling calls up to higher strikes, but we will not turn bearish until we get some confirmed sell signals. Just want to remind you that next Saturday, the 18th, we're having another one of the Saturdays with Larry sessions. We'll be discussing covered call writing from both a novice and intermediate term perspective. And visit our website, optionstrategist.com, to sign up for that or any of our other products that we're offering now. We're having some discounts on our newsletters at the current time as well. Thank you.